Subadra, let's just start with the bond market move of yesterday. Your first take, please.
A spectacular move higher in yields, and basically the bond market's been all over the place. First, we unwound the reflation trade after the election, and then we had to reflate in a rush yesterday. So we've broken through some key technical levels yesterday, and I think that the sell-off, like you said, with equities, the sell-off in the bond market could have legs as well. There's just a lot of cash in the sidelines that needs to be put to work, and if there's an opportunity, I think you're going to see a departure away from bonds into risky assets.
Subadra, a really important question. I did the math yesterday. I used J.P. Morgan just as a giant financial success. And yes, it's come off the bottom, but it's nowhere back to the pre-Valentine's Day trend. It needs to go up another 14%, sort of, to get back to trend. Don't quote me on that, folks. Those are rough numbers. Did you see a catharsis yesterday going up, Subadra? Did you see a catharsis that speaks to a new bull market or a new leg of a bull market?
Well, I'm not an equity strategist, so I can't really comment on the equity market. But from the bond side of the equation, I think one of the things that happened after the election was positioning was a lot cleaner. There were a lot of shorts going into the elections that got cleaned out. And when we got this sort of surprise news from Pfizer, you saw this sort of massive sell-off in bonds. And I think that going forward, what the market's going to be focused on is like you mentioned earlier about what happens on the vaccine side of the equation. There's lots of logistical issues that need to be dealt with. It's a very large deployment from perhaps several different vaccine makers, and how that gets rolled out is going to be very key on how the bond market reacts and how equities react as well. And I think for a change, you're going to see more correlation or sort of more negative correlation between equities and bonds, where you see risk on days in equities and a sell-off in bonds.